Jordan Toy from Legacy Family Wealth now joins us for a look at the day's trading. Jordan, hi, good to chat to you once again, the first time this year, but a quiet day on the JSE, which I suppose is expected. What have you been watching anyway?
Yeah, it's great to be back with you, Ray, and a happy new year to you. I think what we've been keeping an eye on at a high level is it seems to be very much risk on sentiment to start the year off. So, I mean, we looked at the Dow Jones in the US touching record highs in the last, say, 24 hours. We'll wait and see what US markets do today. But just looking, across the board at global markets as well as locally, everything quite comfortably in the green today. So it very much seems to be a risk on environment. I think we might be seeing a little bit of tax loss or the back end of tax loss harvesting taking place. So it's difficult to quantify, but there is a theory that asset managers can look to sort of harvest some losses towards the end of the year and then re-enter some positions as we start the new year off. Maybe we're seeing a little bit of that, but very much risk on across the board today.
Yeah, of course, Venezuela has been the big story. I think some analysts and investors on Saturday sat up in their chairs and thought, what now? What are you seeing with Venezuela? It's a tricky one.
Certainly, I think, and very much headline grabbing, attention grabbing news. I think while the situation in Venezuela initially caused quite a stir, to me, it's largely a non-event. And I mean, we saw that in most sectors of equity markets, we saw a bit of a volatility spike. But outside of sort of the oil and defense complex, we're not seeing massive moves, markets largely shrugging off the impact of what's going on in Venezuela. I think when we look at oil specifically, we obviously had Chevron, which is one of the few major US oil players with operations in Venezuela, moving quite significantly. I believe that was up 5% on Monday. Our take on that is the market is potentially getting a little bit ahead of itself. There's a lot that needs to happen before Venezuela starts producing significant amounts of oil, or significantly more than they did in the past. So it's pretty well covered that Venezuela sits on the largest proven reserves of crude oil globally, even more than Saudi Arabia. But their production is a shadow of its former self. I mean, they're producing less than 1 million barrels per day, whereas in the 90s they potentially were north of 3 million barrels per day. So there's a lot of work and a lot of investment, and I think the US president even mentioned that himself, that has to go in there. So for me, it's very early on to be jumping into some of these oil producers. It's very unclear at this stage where that oil market in Venezuela is going to go. Also, while the president of Venezuela was sort of removed from the equation, the rest of the politicians in Venezuela are largely still there. The regulations are still in place. So it's at this stage, I think, quite speculative to be taking positions in some of these oil players.
Yeah, it's interesting though, Jordan, because we're getting into a situation now with oil, and these guys are stopping to produce oil in Venezuela because they're stuck. There's this blockade. They can't get it out. Now, US President Donald Trump's going to be chatting to his US oil producers about this. Do you think at some point they're just going to get everything right and the floodgates are going to open? Because if they do that, prices are going to drop. It's something that has to be very carefully managed.
Certainly, and it's a delicate market. I mean, we look at OPEC, which is obviously one of the major global producers of oil or suppliers of oil into the market. And OPEC has been cutting production over the last year, and recently they paused sort of any production increases, etc. So it's a market that's got to be managed very carefully, because the risk is that additional supply comes online, oil prices drop, and then it becomes suddenly, in a flash, very unprofitable for all of this infrastructure to be spent and all this production to be kicked off in Venezuela. So the oil price has to sit at the right place for it to make sense for all of this investment to take place in Venezuela. What can make sense is that a lot of the Gulf refining production in the US is set up to refine the type of oil that comes out of Venezuela. So it's a very heavy crude, as they refer to it, that requires significant refining capacity and specialized refining capacity. So there's certainly the potential for profits to be made, but a very high number of uncertain variables at this stage.
Right, US PMI data due out. That should affect things slightly, I suppose.
Yeah, so I think in a relatively quiet week, these data releases take on relatively more importance. As I've been saying for quite some time now, it's, one data point doesn't make a trend, but it certainly gives us an indication of, are we continuing to move in the right direction? We know inflation has been sitting somewhat above target in the US, and we're still getting some rate cuts, potentially fewer rate cuts this year now in 2026. But it'll be an important figure to have a look at. Hopefully not a surprise to the upside, but we'll have to wait and see what that number comes out at.
Yeah, right. Your stock pick. What is your stock pick? It's early in 2026. What are you looking at?
Yeah, so I know I just talked about how uncertain the oil market is in Venezuela, but I think one that's interesting that I've been looking at very closely over the last few days is halibut, right? So I think if you wanted to make a move based on what's happening in the oil market and based on these political events taking place in Venezuela, the natural first reaction is look at the US oil majors, Chevron, ConocoPhillips, etc. To go one layer further down, I think is potentially more interesting. So Halliburton plays in that space, right? So they don't own the oil, but they are the largest oil field service providers. So they are the ones who find it, drill for it, manage the wells, and actually operate on the ground. And they, I think, are quite well positioned to, if that infrastructure spend does take place, Halliburton is well positioned to take advantage of that. And you can clearly see it in the share price. I mean, year to date, we're 6 days into 2026, and it's up 12.5%.
Yeah.
So there's certainly opportunities in these kind of spaces. I think it's opportunities we tend to steer clear of, especially when managing funds for clients. We prefer to take a longer term view. But in my own sort of personal field, it's obviously an interesting one. And I think it's a good example of you need to have an understanding of these companies before an event like this takes place so that you can move quite quickly. But if you were looking to take some shorter term trades, Halliburton is one that certainly in our radar.
Yeah, understand the times, understand what's happening. Jordan, thank you very much. Good to chat to you once again. Good to have you on the close this evening. Thank you.
Thank you.
Jordan Toy from Legacy Family Wealth.